Hello, everyone. Welcome to the Investor's Source, your source of all wealth and wisdom. I'm Dave Goldberg, president of Investor's Source. I have a special guest with us today. I am thrilled to have with us Jake Grenemeier, who is actually an employee of Investor's Source, has been so for about 4 years now. Jake is our senior loan manager. And anyone who is doing deals with Investor Source will need to go through Jake. So good man to know, good man to meet. Jake has become an expert in what's going on in the market due to his relating with all of our real estate investors. He knows the lay of the land and what's going on out there. We thought this being the first interview of the year, we'd talk about, well, we'd get to know Jake a little bit and also just pick Jake's brain about what's going on in the market and how things are looking for 2023 from actually being in the trenches and hearing from all of our real estate investors what's happening out there. So welcome, Jake. And Jake came to us with an extensive background in banking. I actually poached him from a local bank in Loveland and had no regrets, and that's worked out great. So it's great to have Jake with us. And Jake, why don't you tell us a little bit more about your background and specifically how you got drawn to banking and lending?
Yeah, well, thank you for the introduction, Dave. Yeah, you did come in and poach me that day, but no regrets here either on this side of things. So, yeah, so growing up, I was always drawn to numbers, math in general, but I think the banking and finance kind of came with the 2008 market crash. I was at an age that I think I was pretty impressionable, and that crash in general, it affected our family directly. So I think just at that time, given my strengths in math and the effects that the 2008 market crash had on us, it's something that I was drawn to because I wanted to have an understanding of how finance worked, why that happened, how to prevent that sort of thing from happening in the future. So yeah, just really getting an understanding of finance in general is what I was drawn to. So really, I wanted to go more into a financial advisor role. We had around that same time, I guess, a couple of years later, we had a financial advisor come in and speak to our senior class. And he started talking about compound interest, and my mind was just blown. I mean, I knew of compound interest, but when he started showing the examples and things like that, it was really cool to me. And I'm over here on the edge of my seat and looking around at everybody else who's kind of yawning and didn't really care much, appear to care much for it. So I kind of figured that was something that I guess I was drawn to that not a lot of people were, and that was a influential moment, I guess, in my life that kind of steered the rest of my future. So I went to school for business, got my degree in business administration, and while doing so, got a job at a local bank, and just as a teller, but figured that was good experience to get on the resume to set myself up for a future in finance. And that's kind of where I got my start in banking, I suppose. While working as a teller, made my way up the ranks into a personal banker role. And when I finished my degree, kind of just solidified that role. And that's what I was doing until you came along. But helping people there, I think everybody should have a job as at a bank as a teller, just to see how people manage their money, and the good and the bad. I mean, I'm kind of getting sidetracked here, Dave.
Keep going, Jake. You're doing great.
But I worked at a branch that had all variations of economic status. You had people that walked in that didn't have a cent to their name every month, and then you had people who had quite a bit of money, and kind of seeing what those people did. A lot of them actually, looking back on it, were in either in real estate in some way. A lot of people were bringing in their rent checks, and those tended to be the people who were better off, if you will. So that's kind of what I guess got me into banking and lending and finance in general, to kind of come full circle, I guess.
Awesome. So what I'm hearing, Jake, is like you got in, your real interest was in helping people. You say you wanted to actually become a financial advisor, and in a bank or actually anywhere you can help people, of course, but maybe you can talk about that a little bit, how your role in our company now, and maybe even comparing that to the bank, involves. Are you helping people, or are you just pushing a pencil and setting up? I mean, is there help involved in the role that you play in our company right now? And
No,
compare that to what
absolutely.
you did in the bank.
Yeah. So in both roles, you're kind of guiding people, right? So at the bank, people would come in and they would have a need. Either they were coming in to get just a personal loan, or whether it be a car loan or something like that. Um, in some ways, people came in and they knew what they wanted, and I guess in your terms, pushing a pencil. Um, but there are people who needed guidance in that sense, and understanding of what it is that they're getting themselves into, understanding their payment, how that affects their debt to income ratio going forward, and different strategies that they could take to help better position themselves for success down the road. And in a lot of ways, we do the same thing here. You still get all walks of life. You get somebody who comes in with a lot of investing experience and knows exactly what they're doing. And I could probably learn a thing or two from them, which I do on an everyday basis as well. But then you also have beginners, or somebody who may just not look at something with the light that we've seen in the past, and we can kind of shine a light on that, I guess, is the better way of saying that. And lean on our experience to show them something that they may not have seen. Um, so we definitely are helping people, and in my role, I guess I'm more direct with those clients, but helping people see the deal from all angles, making sure they're not getting themselves into a position to set themselves up for failure. We want to set them up for success. So we go through all of that analysis, make sure that they are seeing their numbers correctly, and that they have an understanding of what the loan means for them. And we don't just take everything at face value. We definitely look at ourselves as partners in the deal and want to help guide them and protect them as well throughout the deal. So in both cases, definitely helping people out. It's just a little bit different from a banking perspective, traditional banking, to this position here.
Right. Would you say also that people maybe even come to us because of the help that we can offer them in making, to size up a deal and perhaps making it even more profitable than they would have done on their own or without our help?
Yeah, absolutely. Absolutely. I think they come to us, and I think they continue to come to us for that reason. I think you do get a lot of people. I don't want to say a lot of people. We work with a lot of great people too, but there are people out there who will just push a deal because they see the origination fee, for instance, that they're going to make, and so they want to get that deal done no matter what. I think from our standpoint, we will tell people, no, it's not a good deal. This is not profitable enough. And we're looking at that from again, their perspective as well. We don't want to set them up for failure, even though we might be covered. We don't want to set them up for failure. So I'd say a majority of the time people appreciate that, and look to us even further for guidance after that to find the right deal, and then continue to call us back to bounce ideas, bounce numbers off of us, to really find the right deal for them moving forward and make sure it's a good fit.
Great. Okay. Thanks for talking about your role here and what you are providing for our real estate investors. It's a lot. And they provide a lot to us as well, of course. We learn we learn from all of our investors, each deal we do, as you mentioned. Let's shift gears a little bit now, and our clientele want to know the market. We all know the things are shifting in the market. There's a lot of uncertainty out there right now. And lately, I've done a lot of writing about economic forces and what that's going to mean for the market going forward. And all of that, it's theoretical. And of course, some of it comes to pass and some of it may not. But I think people can get even more knowledge from someone like you who's actually working in the trenches with investors, seeing what they're seeing out there. So that's what I'd like to ask you now is, like, what are you seeing by talking to our investors right now? Are they optimistic about where the market is heading? Are they pessimistic? Are they pulling back? Are they going forward? Exactly what is happening at ground level in the market, and where do you see things going, and where do our investors see things going?
Yeah. So, nobody has a crystal ball, obviously. I do talk with a lot of people, but, it's a mixed bag. You get some people who are feeling really good about the market and are excited about where it's going. And then you have some people who kind of see it as doomsday. I'd say that majority of people are kind of falling in the middle of that, and just kind of taking it day by day, which is kind of where I see things going. I don't see it going extreme one way or another. I see it as kind of a leveling out. Um, I've heard it called the great reprogramming. Actually, one gal that I listen to a lot, her name is Kathy Fettke. She called 2023. She compared it to Tuesday. She said 2022 was kind of like the weekend. A lot of it was like the weekend. You're having fun, you're partying, you're having a good time, and then kind of the later half of 2022 was Monday. It kind of hit us hard, and um, rates skyrocketed, and it just kind of hit you in the face. And then Tuesday is kind of like the leveling out. Everything is going to kind of start to settle down. We're going to find our groove. We're going to see where we are in this market, and I think everything else will adjust. So I guess to come back to your question, where do we see it going in 2023, and what do the investors see? Again, it's a mixed bag. I think it depends on who you're asking. I think that it would be wise to understand that it is unpredictable, and there's not a clear path right now, and to adjust your plan accordingly. The biggest thing right now, I think, is to just be spending more time on analysis than ever and preparing for the worst and hoping for the best. If your numbers work with a 10 to 20% decrease in the market, then they're going to work. You're going to be okay, I think. If you can break even at 10 to 20%, and if you can make a little if it doesn't go that far, and then you end up making a little bit more profit, then great. I think you just need to be a little bit more careful with numbers, and spending a lot more time on your due diligence than maybe you were in the past year or two.
Yeah, I think those are great points about being optimistic about what's happening in the market, even though potentially we're in a recession or a recession is coming, but tempering that optimism with some realism too, and being conservative in the deal analysis to make sure there is enough profit built in, such that if the market continues to soften, which it has in the last year and prices have gone down, build that in, be proactive about building that into the deal. And if prices don't continue to fall, great, you're making even more money than you expected. And if they do, you anticipated that. What about deal flow, Jake? Are you finding that, are there fewer people applying for loans? Do you think that the market has scared some people away? What's your take on that right now?
I think we were at a time where real estate investing almost became too easy and everybody wanted to get involved. So I would say that the deal flow, yes, has cut back a little bit. But I think that real estate and true real estate investors are still out there doing deals. I just don't think you have the dreamer who's going to jump into the market now because it's a little bit scarier. You don't have the people watching their HGTV shows and deciding one weekend that they're going to give you a call and try to make a loan happen. So you have a lot less of that. So I think it is less quantity and probably the more quality, right? The stronger investors are the ones that are going to survive any downturn. The strong kind of survive, or the people that are really good at it are the ones that are going to kind of make it through that storm. So that's more so what I think we're going to see, is that the true investors are going to be the ones that stick around, and you might get some of that, the fluff that had joined the market because it was fun. I think you're going to see some of that fall off. So yes, I would say that the flow has gone down, but it's not off. The spout hasn't been turned off. It's I think back to a normal. It's going to get back to a normal state.
Right. Whatever normal is, but
Right.
saying,
Right. Whatever normal is.
yeah, real estate, very hard to define what normal is, which is changing all the time. Um, yeah. So it sounds like there's kind of a shakeout happening, which
Mhm.
sometimes can be healthy, where, as you've said, the strongest continue and those who are not so strong maybe won't make it and will find something else to do. Well, let me ask you this. Do you think the whole industry can weather, if a recession does come, do you think the industry can weather that?
Yeah, I do. Like I said, I really real estate investors, they don't stop, they adjust, right? So they're going to continue to do business because that's what it's not, I don't see this being another 2008. I don't see it being um what was it, the early 90s, where you had these major crashes. I just think um it's not as comfortable right now, and it's just a matter of adjusting your analysis. Again, going back to that, you have to adjust your analysis, you have to find what works and find that groove again, but you just need to kind of adjust your numbers. It's not like we're at unheard of interest rates, or we're not at unheard of cost for financing. We've been here before and people were continuing to do business. So um, the numbers aren't astronomical. They're just different from what we've gotten used to. We got comfortable and things get a little bit uncomfortable, but everybody finds their way. So no, I don't see it. Um, I do see the industry pulling through.
That's good to hear. And I'm in agreement with you. I think everyone just needs to tighten up their belts and do
Mhm.
things the right way and make sure that the deals they're doing are stronger than ever. In the last many years, we could just count on the market itself to pull through a lot of deals that maybe wouldn't be so doable in a normal market. So I think it's on all of us to tighten up more than ever. It doesn't mean be so tight we're not doing deals, but just can make sure we're doing the right things and the right analysis in all the deals that we do. You talked about finding things that work. Are there any types of investments out there in this kind of market that you think may be stronger than other types? Is it new construction now? Is it commercial, self-storage? Any thoughts on that?
Well, I get again, I just I don't know that there's any one way. No, I think that um, people are going to do what they know. I do think that there's going to be an opportunity for commercial because of the increase in rates and the short nature of commercial loans. So I think there'll be an opportunity for commercial acquisitions coming up. But new construction, I think, would be hard, is a little bit tougher as well, just because you are trying to time this market. I've seen a lot of the days on market for for homes in general have gone up, but you have a lot of money invested when you're doing a new construction project, as well as any other project. But it's a lot of upfront cost when you're doing those new construction deals to hope that there will be a buyer in this new market that we're entering. I do think that you're going to see rentals increase. People are going to be renting because you just cut down with the rate increase. You just cut down the number of people who maybe can afford the home that they want. And so I think you're going to see a lot more people renting. But that being said, if anybody is looking to move or sell, they may not be selling their home either, because they've locked in at such a low interest rate that they may be renting as well. So I don't think you're going to see rent increases per se. There may be more rental properties on the market, but I also think you're going to have more renters. So I think we're just going to kind of adjust back. Again, it was easy for everybody to get into this market, whether you're an investor or you were buying your primary residence, because the interest rates were so low. You know, admission was low, and now it's just kind of, it's creeping back up. So you may not see as many transactions. Again, I think it's just going to fall back to a normal level. But I do think you're going to see a lot more renters out there. And so I think that that will be a place to take advantage of as well. But I do see commercial, like I said, because of the short nature of commercial loans, short-term nature of commercial loans, I do think that will be a opportunity for people as these commercial loans come due and they're looking to either have to renew their loans. That's a much higher cost than it was just a year ago. So baking those cost increases into your pro formas or your analysis, it gets tougher. And so they may be looking for alternatives as well.
Right on. Cool. Well, sounds like there's still opportunity out there. My thinking is we're lucky to be in a state like Colorado, where there are still a very desirable place to live. People keep moving here, and there's going to continue to be a demand for housing, either on the purchasing side or the renting side. So those forces will counteract a lot of the economic forces that are making it harder for people to buy and to rent. Just the sheer number of people continuing to come to Colorado is going to drive housing and overall economic development too. Just more people here means a more robust economy. So I think that's always been a big factor in keeping Colorado as a market that not experiencing the big swings in prices downward. We're definitely getting price swings going upward in the last number of years, and those have been great for everybody's portfolio. Probably won't see as much of that anymore, but demand is still going to continue to be high, and that will, in many ways, keep charging the market. Awesome. Well, I think we're going to wrap things up. Just want to see if you have any final thoughts on any advice to give to investors out there. Should they be pulling back right now and waiting? Should they be going forward and plunging ahead as if nothing is going on? What's your final words of wisdom, Jake, on investors who are either new investors or old-time investors? What should they do right now in the market?
Yeah, absolutely. No, I don't think it's a time to stop. I think you can move forward, not plunge forward without caution. Double down on your analysis. Again, real estate investors, they're not going to stop. They just need to adjust. So adjust your process. Make sure you're looking at the potential losses or the decline. Bake that in and make sure your numbers work if that is to happen.
Great. Okay. Cautious optimism is the word. We still have a market, and let's keep going forward and be safe while we do so. All right.
Absolutely.
Thank you, Jake. Thanks for being with us today. Jake is in Nebraska right now, folks. He moved from Nebraska to Colorado. We hired him here, and now he's back in Nebraska and still an integral part of our company. Okay, have a great day, everybody. Thanks for joining us, and we will see you next time.